Hey traders and portfolio managers, John from the Traders Journal here. It's been a couple of weeks since my last update. I've decided to stretch these out as I think it is better for me as a longer term trader to break down these markets over time so that we can see how the trends develop. I think doing it every week requires a lot of updating, a lot of, well, this is what happened and that is what happened. I think if we're trying to get a more trend approach as to what's actually happening in the markets, you stretch it out. I think a monthly, 12 times a year will be better. That's what I'm going to go with for now. Maybe that'll change if I feel like doing it differently. I don't know. I mean, this is all for free, right? So I'm just putting it out there for anyone who wants to get some input on what's happening with the markets. So enough of that. Let's go right into what's been going on. As always, I like to start with the VIX. And if you notice a couple of things here, I'm going further back in time, I think, than I've previously showed, because again, I want to focus in on the trends that are in play in these markets, and so that we can have some perspective as to where a market is today and where it's been in the past and what the behavior looks like. And I have the marker to show where my last report was on August 23rd, so that's just over a month ago, just about a month ago. And let's see what this market has done since then. We did say that it was elevated, and we were navigating a market that was still showing some pressures, and it came true. We saw a pop here at the end of August, beginning of September, but no follow through, nothing like what we saw in August, and we're back down to around 15 or so, 15 and a half, as you can see. So if I thought it was elevated here, it's still elevated here. That hasn't changed. I'd like to see it get back down to sub 15 and to this here, where we could say, okay, I think the market is just not as worried about something happening, or a little bit more comfortable. So this is telling us that there's still a lot of protection out there, and the market is also at the highs. Whereas the market is at the highs here, and there's not a lot of protection going on. Market is at the highs here, and there's protection going on. So just something to be alert to. Going right over into the majors, and mini Dow. Last time we said too fast, but we know it's targeting the July highs. How did we know it was targeting July highs? Well, we were watching the trend, right? And we saw it attempt this July high and come off, but it found buying down below, which supported the trend, and we were able to make another attempt at this high and push through it. So it's a continuation of the trend. Very important for me was this move here, because if this gets back down to this low, then you start getting some shakiness and makes an attempt or a push to these highs a lot more difficult to achieve, which we'll see when we get over to the mini Russell, because that was quite a sharp dip. But for the Dow, I mean, this trend is still playing. Only thing I don't like is that I'm seeing a little bit of divergence here. Just tells me this market would be probably better off for the longer term health of this trend to be consolidating here. But price is going to do what price is going to do. We're still friendly to it. We look for it to continue to push higher. But, something like this here, coming back down, finding support into this, or even right down to 41,000 doesn't surprise me if we start seeing that happen at some point. But I don't know when that's going to happen. It's just something to keep in our mind, right? We don't try to predict. We just ride the trend and make sure our trading and our positions are aligned with the trend. So let's go over to the mini S&P, and you're going to see the same thing here. Too fast, a little bit too much, but came back off, corrected, found the buying necessary into these lows to support the larger trend. And it made another attempt at the highs, and there you are. There you have it. You're above the July highs, continuing the uptrend. Also showing the divergence here. So I'm not so sure about what's going on here, but as we can see, we have the divergence during this melt up from the early part of the year. And look, the market just quietly eked out little gains, little gains, little gains, and divergence persisted, but the market just kept making highs and then corrected. So I don't know when this is coming. It's going to come eventually. I just don't know when that is. I have no prediction on that. Is it setting up for that to happen? Sure, but it can continue to go. And I think that's what continues it to go, is that you keep getting sellers in here thinking, okay, there's no way this is going to continue. The ranges are getting too small. We've seen this already twice. And it just keeps going as the shorts cover and keep going higher, and it becomes a hated rally, much like this was here. So we ride the trend. We know the position of the market. That's winning, and that's the long side right now, and that's what we're going to go with. Nasdaq, a little bit different story, because this dip for this high here looks like a market in consolidation, we said. And then this dip here got kind of low into this area, found buying come in. Momentum stayed healthy. But like I said, looking at the Dow, it's going to take a lot more work to get back up to the previous highs. It's got a lot of ground to make up. It seems like it's starting to make up that ground, because look at how this is still going up with a little bit more strength than, no, not really. They're all looking pretty good. So let's scratch that thought. Target is clearly going to be these July highs ultimately for this market. I'm just a little bit concerned about, like I said here, looking more like a consolidation. It's just not at these highs yet. It's going to have to really have a bang up end of the year to get there in August and October, November. It's going to really have to take off. And I have no opinion as that, but the trend is up. So that's what we're going to ride. But this looks more consolidation to me. Mini Russell. Now, here's a market that, like I was saying earlier, there was this mess here, and this market paid for it here because it just came off really sharp and back out and into these lows. So it makes a really messy chart, messy trend. It's there. There's the uptrend, right? Taking out the previous high, higher lows. So there's definitely an uptrend here. It just kind of feels like more to me like a Nasdaq kind of setup. But first objective to the upside. And look at over the last couple of days, it really hasn't been kind of going in the wrong direction, right? I mean, everybody else has been going higher, and the Russell is struggling a little bit. So it's something to think about. Just observe. And it's going to have to do a lot of work to get back up to this mid-September high and then back up into these July highs. So it's got a lot of proof. The trend is up, but still not as exciting as what we're seeing in the other majors. Fixed income trends continue, right? Struggling. A couple of weeks ago, we said struggling, but we have the trend behind us, and it struggled, found buying come in, and makes a new high. A little bit of divergence, so it corrects the divergence, but again, buyers come in down against these lows, continuing the trend. I mean, this is just, as you see, this is a part of the way trends move, up and down, up and down, up and down. It's got to keep proving itself as it goes higher, that the buying is following the market higher. Okay? So right now, if it can hang around here and just go sideways for a while, and the buyers continue to support on any type of weakness, I think that'll build more confidence in this trend, as there's always more confidence can be built. And then we can start thinking about these highs. A probably unhealthy action for this trend would be a return to these highs really fast, very soon. I don't know if that'd be sustainable, but if the market can show it can hold these levels, you could look for another push up at the highs. And then, getting below these lows, getting below this trend line, that's when you see the reversal. And then you start seeing this turn into one big mess consolidation pattern. Same for all the fixed income products here, 10-year, 5-year, 2-year. Let's look at it, how they look against. Oh, they're all kind of struggling back at these December highs, right? They're all finding some resistance there. Okay, let's go over to the currencies. Now, going forward, I've switched over to futures. I'm not looking at cash anymore, just because I am trading futures, and it's just easier for me rather than moving analysis from one to the other. So going right into the euro currency, the trends, let's see what we had. Phenomenal move, yet with Forex here, we see increased probability of correction needs to cool off, and that's what it did. It cooled off, came back to the median line, and like we saw in the majors, right? Buyers stepped up from the previous lows to support. Sellers didn't all bail, took some profit taking, got back in, and then we take another run at the highs. That's a trend. Okay. Interesting for me is that the market is finding resistance against this 112, 113 area. Also interesting for me is that momentum is declining, which we see in consolidation. So this can be this market consolidating and then getting ready for another push higher. I personally, I ride with the trend. So the trend is up. I'm not arguing this trend right now. We can see this turn into a consolidation. We can see these highs again retested. But if we get to these highs again, guess what we're going to see? More divergence, which I don't particularly like. Again, it's a setup. It's not a trading signal, but it just kind of, gives you just a little bit of cause. For me, I'm not too crazy about divergence. I've said that plenty of times in these videos. To the downside, where do I start changing my opinion? Well, if we get down to this low here at 110.5, and then if we get down below 110, then I think maybe there's a reversal here. But I am friendly with this chart. Sterling, it's going to be the same thing here in the sterling, if I can get to it. Oh, no, it won't let me get to it. All right, let me move that out of the way. Okay, where else can I move this? Okay, sterling, yeah. Done a lot of work here, maybe a pause. There's your pause, and it just takes another leg higher. I mean, momentum was there. Now a little bit of divergence showing up. Maybe it's got a little bit too quickly, a little bit ahead of itself, but trend is up. Okay, and then this is where I expect there to see support. So come around 132, and then below that 130, and then much like the euro, we get back down into this area here, then you start getting a little bit shaky, you'll bring in more profit taking, and then you don't want to see a breakdown there. That's a full reversal. Aussie, also, again, messy, but trend is higher. Corrects, finds the bids from down below coming up. Not too much profit taking. This was all pretty fast too, and it come in support and back up to a new high. Now it's finding resistance against the December highs, but the trend here is clear. This is up. But when we step back, we see that it's still just in the middle of a wide range that it's been in, going all the way back to 2023. Kiwi, same story, right? Pushes up, looking for the December highs, can't get there, corrects. Buyers from down below come in, give support, and there you go. Another leg up. Divergence showing up here, so a little bit cautious at these levels. I don't know if you really want to chase it right now. Wait for a bid to come back. This trend shows that it's really got some legs underneath it. Stepping back, it's just hitting the higher end of its range for like over the last 2 years. Yen, this is a little bit different now, right? We have some uptrend resistance here against the August high, caused the market to come off a little bit, made another attempt. Divergence continues to increase, comes off again, finds bids, holds up. This is more of a consolidation for me than a reversal as we see the momentum falling. I don't think we want to get down into these lows, then we may see this whole picture reverse, but the trend for me continues to be higher in Japanese yen, and another push at these highs I can't rule out. CAD also same thing. Quite a bounce a couple of weeks ago, came back, drew support against all of these lows here, resistance, buyers stepped up, longs took some profits, come back in, another round of buying comes in, but can't get it through this previous high, and now we're coming off a little bit, but this is what the market is trading right now, this uptrend, but we still have, I think, some lingering effects of this downtrend here in CAD still influencing price. And if we draw a trend line, we're going to see proof of that happening, right? I mean, it's there. So for me, cautiously friendly, the CAD on the longer term, but it needs to get up over 75. And the Peso gets the bounce, but still just fighting against this trend here. Let's move this in line because we had to change a little bit of a break above, gave it some hope, but still, I think it's clear here. Peso on the downside, get it back up to right here at 51.68. If we can take this out, then you'll start shaking out some of these shorts. Going over to precious metals, gold. A couple of weeks ago, we were prepping for another leg higher, and buyers came in to support, and we pushed through these highs, and there you go. Continuation of this uptrend. Another leg up. mean, there's no reason not to like this right now. And we're not even seeing any divergence, and I like the way how this momentum is staying up above zero, consistently steady. Sure, it can correct and come back down. I mean, it can even come down to 25.71 and really not break stride here. And that may happen as, gold can kind of move sharply sometimes. But for me, stay friendly gold. Silver was mired in a downtrend, trying to play catch up, failed, but bids came in against these lows, supported, and pushed it back up. And now you force the shorts to cover, bring in new longs, and now you're targeting the May highs. That's a tough one. The trend here is clear, right? Because we have an uptrend going all the way back. We have this correction. We have an uptrend here. I stay friendly silver. I think the objective ultimately is getting up to $34. However, if we get back down to 27, 28, I think that reverses everything and that creates a whole big mess for this market. But right now, silver looks like it's ready to go and test a new high. Copper was in this correction off of this uptrend, very deep correction, I think deeper than any of us, at least myself. I didn't really see this happening, especially when it broke through this low. That was it. Everybody bailed. Now you had bids come in to support the old resistance, right, where it broke out and it failed. But the next time it tried to come back down, buyers stepped up and supported it. So you had this little bounce, and that was enough for this market to start to dig itself out of the hole, take out this high, and then everybody came right back in when they saw that this market was done going down, when it broke this trend line, and it was ready to turn the other way. So I'm friendly copper, maybe a little bit in the short term, a little bit overdone here. I could see it come off and correct, maybe right down even to 434. I don't think that's so bad. I think this market can withstand a correction and continue to go higher, but I don't see this downtrend. This downtrend's out of play for me. And I don't see this becoming another downtrend either. Just right now, this is the trend we got to watch out of this August low. And then you have the larger uptrend, right? So stay friendly copper here, though, in the short term. Might get a little bit of a correction. Energy we can move through fast. Nothing's really changed here. Corrective bounces out of lows, but this trend still remains in play. Failure would have been a nice fade here and just comes right back down. I don't know if it's going to hit this low. I have no idea, but the trend is down. So heating oil, same thing. Trend is down. Little bounce. If the buyers come in here and support it, then maybe we'll see something like what we have in the other markets, right? Where the market makes two lows, can't break down, and then buyers start coming in and getting confident. That's what it needs to do. It needs to hold this low. Same thing with crude. If it can hold this low, maybe there'll be some ideas that, okay, something's happening, and they'll try to push it up again. But I don't know if this low is holding just yet. RBOB, same thing. Trend is down, clear. But market gets back down to this low and holds, maybe enough for the shorts to cover, and then you start looking for it to turn and brings in some bottom picking. But for now, trend is down. Natural gas getting interesting. Small little incremental moves higher. What we see here is these lines are off. We see a counter trend move against the larger downtrend, bouncing off this bottom, this low. Did not violate this low, so buyers came in supportive, and here starting to claw up a little bit higher. I mean, it's got to get up over 320, 350, even over these highs before you start thinking about any type of reversal. And what I thought was interesting is that if you go back to last year, this time, August through October, and where is that here? August through October. You see in August there was a pop, in October, and then there's a pop in October, right? Market was holding the lows. Everybody was thinking, well, you know what? Maybe it's not going to break down. Well, it got a pop and didn't follow through. And then by November, it made new lows. So right here, it's kind of the same thing happening, right? Maybe even can take out, scare everybody. But I don't know if it's a full reversal unless we can back up over 4. We get back over 5. So just a correction and a downtrend for me, but short term, I think I like it. I like this. Get down to this low here. That's the flush. Corn, much like natural gas, downtrend, firmly entrenched, continue with some divergence here. And look at how these last few recent attempts to break down over the last month didn't get any follow through to these lows. So they're short covering around, some fresh longs coming in. Counter trend move. It needs to start taking out 448, $5. It's got to get up into here before you really think this is anything longer term changing in this market. But momentum is there. There's definitely some short-term positive tone in this market. Let this play out. Maybe there's a short-term position in here, but longer term, again, this market is still in a downtrend. Going over to wheat, same thing. Counter move here is forcing the hands of some shorts, bringing in some longs. I'll stay friendly this one just because, it looks like it wants to test this high again. Momentum is there. If it doesn't test this high, you look at this low here, 566. So 595, 566, it's got to hold. And it can also just come back down and just stay right around here. Counter trend move right now. So I don't see this market reversing unless something changes. If it can show that it can hold these levels, maybe it starts to go try to go higher a little bit, but not too much to get excited about. Nice bounce out of the lows, that's it. And soybeans getting interesting because we do get these counter trend pops in soybeans, right? Look at how these are so clean, and we're getting one of those right now. Can this continue? Sure. I don't know how. I'm not going to put a timer on it. It could become this very easily. It can become this very easily. But we know the levels where I start to change my tone, and that'll be if it breaks this trend line. So right now, I'd say if it gets back below $10, we start seeing the larger downturn start to grab. But short term, I stay friendly soybeans, but it's got to do a lot of work. It's going to find resistance up at $11. There's so much work it has to do. So short term, friendly for soybeans. Coffee, trend is clear, we said, wants to test higher levels. There was the test, correction, and another test to new highs, correction, finds the support, and test to new highs. I mean, this also, like many markets that we saw in uptrends, it's just ride the trend here. There's nothing to fight, okay? It's here, nothing to question. If you're getting in now, you have to ask yourself the question, why weren't you getting in back here or anywhere else? I don't know what you were doing. Just ride this for now. And we have our levels down here around 250 where we start thinking maybe it's going to start to correct even deeper. Sugar, this has looked quite differently over the last couple of weeks. We were bearish here. We have not liked sugar for a while. We saw it trying to counter trend. I think this is interesting how it counter trended against the prevailing trend, came off, but did not take out this low again, and then got a nice shoot up. So this, to me, is reversing a lot of this negative action by being all the way up here at 23 cents, right? So that kind of is an example of what I'm saying in soybeans. Like, it's got to get up. They got to get up to $12. Wheat, got to get up into this $6, $7 area. Corn, need to get up into $5. Then you start thinking, okay, there's something bigger changing here, like sugar. Bigger reversal. It's going to have to prove itself on weakness. But for me, short term, medium term, I went from being short and not liking this market to liking this market and proving itself. And you got a nice little long here. We'll see. I don't think you want to see it back below 21 cents. And you'd like to see it get back up over 23, 24 cents to continue the trend. Cocoa, nice move, but needs to poke around 82.50. Yet action was supportive, so it moved up, came in. Buyers continue to support this market on weakness, and they pushed it to a new high. So that we're breaking the trend line. I say friendly cocoa. Where do I start changing my tone? If we get back down through 7,000. But friendly cocoa. And Bitcoin. We've been negative Bitcoin, not liking it, following this trend. And we saw a new it pushed towards this low. It didn't get there. Some short covering coming in, bringing it back up. Taking out this high is interesting for me, but I'd like to see this high here taken out. That's up around 70,000. Then you start, maybe then we can start thinking about this larger uptrend grabbing and going again. But jury's still out. Short-term trend up, so we'll stay friendly to it, but just watch the fade against this trend line. And to the downside, if it gets back down to 60, it's got to start thinking about these lows. ETH lagging, really dug itself into a hole here, as we can see, fighting this downtrend, counter trend move, just like Bitcoin too, more of a counter trend move. However, we step back and we see it's kind of held in consolidation, where ETH really reversed the whole up move and now starts fresh. So it's got a lot of work to do. I think around 3,000 is where I really start getting friendly, but short term we'll stay a little bit friendly ETH. But don't really change our opinion that it's in a downtrend until it gets up over 3,000. Okay, that comes in at around 26 minutes. Hope you hung through the whole way. Thanks for hanging in there, and look for the next report in a month. Hope that helps you out. Take care.